Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta, and the fall seems to be getting steeper for the SGX Nifty. Most of the Asian markets are down almost 3 to 4%, and the SGX Nifty actually managed to go below the 10,000 mark in trade. So we are looking at a very weak opening. Probably the Nifty may go below the 10,000 mark in today's trade. All the ADRs ended with severe cuts on the market. So 3% on ICICI Bank, 2.5% on Wipro. Dr. Reddy's was down 2.5%. So overall, extremely weak cues coming in from the global markets. All the ADRs ended with a negative bias. Surprisingly, crude seems to be holding up in today's trade. It's moving up. It's up almost 1%. So closing in on the $70 barrel per mark is the Brent, and WTI is about the $65 barrel per mark. But it was a weak close for commodities on the LME. All of them, copper was down 1.5%, zinc was down 1.5%, nickel was down 2%, lead was down 1.5%. So that was LME. But look at the cuts that are coming in on China currently. Copper is down almost 2%, zinc is down 1%, aluminum is down 1.5%, and look at steel. Steel is down almost 6%. Rubber is down 7%. So overall, there is enough selling both on the equity side and the commodity side. What is doing well are the precious metals. Money seems to be moving back into the safe havens as of now. But surprisingly, yesterday, FIs, DIs, both of them were net buyers. The buying intensity is not very high, but on a month-to-date basis, as well as yesterday, both FIs and DIs have been net buyers in the market. What happened to the market? We were down 40 points, but there was more selling on the Nifty, mid-cap and small-cap indices. The Nifty Bank was down almost 0.5%. Fresh short positions were seen there. The real estate and media index were down almost 1.2% each. They were the worst performers in trade. As far as the VIX is concerned, it moved to levels of 15, not a big spike coming in. But today with the SGX Nifty cracking, it could move in much higher. The Nifty was down 40 points. Reliance, HDFC Bank and IndusInd Bank managed to give in some support. But selling was seen significantly in some of the banking space like ICICI Bank and SBI. Maruti again continues to grind in lower. What happened with the FNO? A little bit of long unwinding was seen on the Nifty itself. There was open interest decline of almost 0.3%. So that caused the market to fall by 40 points. What happened with the Nifty Bank was fresh short positions were seen on the counter. 7% open interest addition on the short side. Now the chart becomes extremely important. What is happening? If you're looking at it, strong support at the 10,000 and 10,100 mark. The SGX Nifty is indicating that both of them the Nifty will go below these levels. So these red lines will actually have to shed positions. These are the put writers which believe that the market will be stable or going higher. Since the premiums will go up significantly, they will make huge losses and have to cut position. Call writers will become much more aggressive at levels of 10,000 and 10,100. Yesterday also what happened was that call writers were active at levels of 10,000, 100 and 200, but significant amount of put writing happened at the 10,200 mark in trade, which will get unwound in trade today. As far as stocks are concerned and the PCR is concerned, PCR remains stable. On the stock side, Jet Airways is the counter that comes into the FNO ban. It will be interesting to see what happens with Jet Airways. There's one counter that goes out of the ban, and that is SAIL. SAIL was up almost 2% in trade yesterday. Now, as far as stocks are concerned, Repro Home was one of the counters which saw long unwinding that came in. There was other counter which was in focus was Escorts, which again saw long unwinding that came in. You had counters like Mindtree, which saw fresh short positions being built on open interest build-up of 6%. And finally, you had counters like Balrampur Chini, which again the rally cracked. It saw long unwinding. Open interest decline was 6%. But coming to global news, in retaliation to President Trump's imposition of tariff, China has announced plans for reciprocal tariffs on $3 billion worth of imports from the US, and products range from anywhere between steel to pork. Bloomberg's Tom McKenzie has more on that report.
Well, it seems like it's a shot across the bow from China rather than a punch to the gut, because 3 billion versus the 50 or 60 billion that Trump is looking at is obviously a big difference between those two numbers. And they're looking at, what, 25% tariffs on steel and on pork, 25% on pork, I should say, 15% on steel, 15% on wine and fruit. So, yeah, it's a warning shot at this stage from China. Look, China said, and it's put out statements this morning, whether that's from the ambassador in the US or the Commerce Ministry more recently, saying that they're not afraid of a trade war and that they'll fight it to the end, essentially, is what the ambassador said. But also, clearly, China's policymakers and China's corporate leaders really do want to avoid a trade war. So I would say suggest that China is going to take a pretty measured, strategic approach in terms of its response, in terms of reciprocal measures to what's coming out of Washington. No, there are other measures clearly that they can take. They've got plenty of other firepower, whether that's taking overt measures just putting stumbling blocks in place for US companies operating on the ground here in China, or making it more difficult to import, for example, US soybeans. Of course, China pulls in about a third of all the soybeans exported from the US, worth about 15 billion US dollars. And they have plenty of other tools at their disposal. But for the moment, this is going to be probably a measured response from a Chinese government that wants to focus more domestically on some of the pressing issues here at home.
With China, we're going to be doing a Section 301 trade action. It could be about $60 billion, but that's really just a fraction of what we're talking about.
Well, on the day when commodities across the board have witnessed a crack, Vedanta is the stock of the day. Bank of America Merrill Lynch has actually initiated a coverage on this report with a buy rating with a target price of 380 rupees, which indicates a potential upside of around 30%. It says the favorable business mix of 50% coming in from zinc, which is the most preferred metal at the moment, is most positive for the company right now. It also suggests that the benefits of capacity expansion at Hindustan Zinc unit comes at a time and is coinciding likely with the period of multi-year high zinc prices. Projects in aluminium as well as oil and gas businesses are also in advanced stages, and the outlook for these two commodities also seems to be improving or sustaining for that matter. It says that the Vedanta currently valuations are trading at a 21% discount as compared to the global peers. However, the discount is expected to narrow going down further on account of the delivery growth or the volume growth that the company is expected to witness across all its verticals. In terms of the commodity pricing, if you compare the performance of commodity zinc especially along with the way the stock has performed, you'd see on YTD basis the company has fetched a negative return of 12% as compared to a 2% decline by zinc. On yearly basis is a positive figure out there at a number of 12% return as compared to 30% return given by a zinc commodity. If you see this stock is the analyst favorite. Almost 24% or 24 analysts who are covering the stock have a buy rating on this counter and suggest a potential upside of nearly 35.7%.
Let's now shift focus to the currency space with Saloni Dhanuka and myself, Jayesh Khilnani. I'll be taking through the commodity space. Starting off with the base metals, the index itself declined more than 1% for the second day out of the last 3 days. Now, this is largely on the back of Trump tariffs on China that have sparked trade war concerns once again. Now, US has also decided to shield Europe, Australia and Brazil from the steel tariffs. As far as individual base metals are concerned, we had a very weak close on the metal exchange. Nickel was down about 2%. Copper, zinc and lead declined more than 1% each. Aluminium and tin closed marginally lower. But if you look at the Shanghai Futures Exchange, most of these base metals have started on a negative note. In fact, rubber is down as much as 7% and steel is down as much as 5%. So we'll have to wait and watch through the course of the day how the trade pans out. Shifting focus to the gold prices, investors are actually now giving it a second look as safe haven buying continues now. Now, interestingly, what has happened is the open interest in gold futures that has surged to the highest level since January this year, which has renewed optimism in the gold markets. As far as oil prices are concerned, we did see a minor blip come about for oil prices. Overnight, they were trading about 1% lower. However, in early Asian trade, they have recouped all that losses and in fact trading more than 1.5% or rather more than 1% higher, with WTI trading above the 65 mark and Brent nearly nudging the 70 mark. But that said, Saloni, how did the dollar react to the trade war concerns?
So dollar yesterday ended steady, Jayesh. However, it is now trading lower, 0.2% lower, well below the crucial 90 mark near 89.60 levels. Well, speaking of Indian rupee, yesterday it snapped a 5-day losing streak and ended 10 paise higher at 65.11 levels against the dollar. Now, the domestic unit was trading in line with Asian currencies after Fed stuck to its outlook for 3 rate hikes in this year. Well, speaking of the bond market, sovereign bonds gained yesterday for the second consecutive day, and yield on the new 10-year benchmark security dropped nearly 2 basis points to end at 7.56%. Now, in terms of flows into debt market, global funds reduced their rupee debt holdings yesterday for the third consecutive session. They reduced their debt portfolio by nearly 870 crores according to NSDL data. Well, on the global front, the dollar extended losses against major of the currencies after Fed maintained a dovish stance on its fiscal policy. Elsewhere, Japanese yen was the only G10 currency gainer yesterday as investors rushed to safe haven currencies amid trade war concerns. And lastly, speaking of dollar rupee, now it is trading at 65.18 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade.
Amongst the stocks that we are tracking today is L&T Technology Services, which has won a multi-million-dollar contract from a German plastic maker. You also have JSW Energy, where the company has secured a power purchase agreement for the supply of 200 megawatt to Punjab State Power Corporation. With this, the company has said that their share of long-term PPA proportion has gone up from 69% in December to 73.8% now. We're also watching out for United Spirits. The company will consider stock split on April 13th. The next that we have in the list is Shalimar Paints, where the company will raise 50 crores via rights issue. They've set the price at 140 per share. You also have Anjani Portland Cement. That's a smaller cement counter, but they have said that they will set up additional clinker producing unit for 400 crores. This when their current market capitalization stands at about 400 crores. We're also tracking next Alankit Limited, where the company's subsidiary has received full-fledged money changer license from the RBI, so watch out for that name. We're also tracking some of the bulk deals, the first one being Ashapura Intimates, where the company's promoter Harshad Thakkar has bought 1.2% stake yesterday, so the promoter has been continually a stake in the counter. And then you also have Shaily Engineering Plastics, where HDFC Mutual Fund bought 0.6% stake yesterday. But do remember that the negative sentiment could mar some of the good news as well. But also watch out for some of the steel counters after Shanghai Steel has slumped about 6%.
So Bharat Dynamics will be listing on the exchanges today. The company had raised close to 961 crore rupees at an issue price of 428. Now the IPO had received muted demand, where total subscription been only 1.3 times. Now the QIB portion was subscribed 1.5 times, while the HNI portion was undersubscribed at 0.5 times. The retail portion, however, received demand for 1.4 times. Now the street is expecting a flat listing from this IPO. Now, so let's see how the valuations would stack up on listing. And now at the issue price of 428, the market capitalization is close to 7,800 crore rupees. FY18 price to earnings was 22.7, FY18 market cap to sales 2.8, and FY18 EV to EBITDA was 13.3. Now if it lists at a discount of 20 rupees, the market capitalization would be close to 7,500 crore rupees, price to earnings would be 21.7, market cap to sales would be 2.1, and EV to EBITDA would be 12.6. And if it lists at a premium of 20 rupees, then the market capitalization would be close to 8,200 crore rupees, price to earnings would be 23.8, market cap to sales would be 2.3, and EV to EBITDA would be 14.1. Now if you see, Bharat Dynamics is a mini Ratna status company managed by the Ministry of Defence. Now the company's primary customer is the defence, and the order book is close to 10,500 crore rupees, which gives a good revenue visibility for the next 2 years. Now the company is a manufacturer of missile. Though it manufactures different types of missiles, it's a sole supplier of surface-to-air missiles and anti-tank guided missiles to the Indian Army. Now if you see, the company has 3 manufacturing facilities in Hyderabad, Bhanur and Visakhapatnam, and is in process of setting up 2 more facilities in the states of Maharashtra and Telangana. Now, 2 different types of categories generate revenue for the company. One is the manufactured goods, second is the traded goods. Now, though manufactured goods constitute around more than 70% in the last 3 years, but for the first half of financial year 2018, they constitute around 56% to the total revenue of the company. Now, if you see, the company does not have any peers, so let's see the financials. The company's revenue, net profit and EBITDA have grown at a CAGR of 39%, 11% and 90% over FY14 to FY17. On the balance sheet side, if you see, it's a debt-free company with a book value per share of 89 rupees and a cash value per share of 71.5 rupees. Lastly, on the return ratio side, the return on equity has been falling for the company, but the other 2 return ratios were quite stable. The return on equity was 21%, while return on capital employed was 21%, and return on asset was 4% on an annualized basis for FY18.
I do think that this is an opportunity for fundamental reform to fundamentally improve the public sector, the banking system in general. I do think that we need to think about whether public sector ownership per se has kind of aggravated some of the governance issues that we face, both for the banks themselves, for the government, and for the regulator. So all of these are and therefore I think public sector ownership should be part of, whether we should change public sector ownership should be part of the reform agenda going forward.
Gross slippage, the number which we declared in third quarter, our estimate as of now is that in fourth quarter we will not exceed that number.
Okay. Also, sir, I wanted to understand the kind of impact that the hardening of bond yields will have on treasury income in the fourth quarter, because bond yields have only risen from 31st December.
Yes, there will be a mark-to-market requirement, and the yields as of now are 20 basis points higher than what they were at as of the end of 31st December. So to that extent, mark-to-market provisioning will be there for State Bank of India and many other banks.
Has there been any communication to the RBI to allow to shift some bonds to the HTM category to reduce that treasury hit?
There has been a representation by State Bank of India as well as by Indian Banks Association giving certain suggestions and requests, and let us see what the response of RBI will be.
Okay, Mr. Kumar, last 3 or 4 questions. Firstly, just an industry view, and a lot of comments. Firstly, from the Reserve Bank governor recently, that dual regulation of public sector banks is a serious issue plaguing the sector. I wouldn't want you to take sides here, but if you have thoughts on this subject and either or direction that you believe could be more favorable from a functioning perspective of PSU banks.
No, as far as the corporate governance in public sector banks is concerned, definitely there is a scope for lot of improvement, and it is incumbent upon the management all the public sector banks, including State Bank of India, that they work very hard so that the negative perception about the corporate governance standards at public sector banks is alleviated, and the public sector banks, their contribution has been immense as far as the socio-economic development of the country is concerned. But governance improvement as well as the approach with which we handle the customer accounts or the customer experience with public sector banks, there is a huge scope for improvement, and I can assure your viewers through your channel that we at State Bank of India at least are working very hard for improving the compliance standards, governance standards, the approach and the manner in which we handle our customers, and that is definitely the end of the hour.
First of all, genetic disorders have not been defined per se by the Insurance Regulatory Development Authority of India. However, in a March 20 circular, it said that in line with the Delhi High Court's order, genetic disorders cannot be excluded from any existing or new health insurance policies. In line with that, when we spoke to New India Assurance's Chairman and Managing Director G. Srinivasan, he said that the company may have to go for a price correction in the next year if they have to factor in the cost of genetic treatment in their basic Mediclaim cover. To give you a sense of the size of health insurance industry in India, health insurance is the second largest line line of general insurance business and has the highest incurred claim ratio, which means that a company pays 101 rupees for every 100 premium that it receives for health insurance. Also, genetic disorders have been excluded from all the basic Mediclaim covers from so far, but now once they would be included, according to ICICI Lombard's Sanjay Datta, he said that the experience of this year's claim settlement would only help them decide how the pricing of the basic Mediclaim covers would be decided, and then they would take it up with the regulator. Also, HDFC Ergo, like you said, mentioned that there is no definition of genetic disorders which can also include something like ischemic heart diseases or neural tube defects, which have so far been covered by health insurance schemes separately through different plans. However, we are yet to see what will be the implication of the cost, which, as indicated by different insurance companies, would only go up if genetic disorders were to be included.
Let's now look at some more stocks to watch based on yesterday's buying or selling. In today's case, we have only selling stocks. The first stock that you need to keep on your radar is Bharat Electronic. Now, that was down about more than 3% in trade and saw delivery selling of more than 50 crores. The delivery volume surged nearly 90% at about 36 lakh shares as compared to its 5-day average. And the total volume also surged more than 85% at nearly 70 lakh shares as compared to its 5-day average. The second stock to watch out for from the banking space will be ICICI Bank. Now, that was down nearly 2% in trade and saw delivery selling of nearly 450 crores. The delivery volume, however, shot up 54% at nearly 1.5 crore shares as compared to its 5-day average, and the total volume shot up just 29% at 2.5 crore shares as compared to its 5-day average. The second stock, once again from the banking space, that was down. SBI, that was down about 2% in trade and saw delivery selling of nearly 250 crores. The delivery volume shot up more than 50% at about 1 crore shares as compared to its 5-day average, and the total volume surged 23% at nearly 3 crore shares as compared to its 5-day average.
India's upper house of parliament, or Rajya Sabha, has 245 members, of which 233 are elected indirectly and 12 are nominated by the President of India. The election and tenure of Rajya Sabha members of parliament are quite different from that of the Lok Sabha. A Lok Sabha or People's Council member is elected directly by Indian citizens from a particular constituency. A Rajya Sabha or Council of States member represents a state and is elected by the elected members of the Legislative Assembly of that state. Lok Sabha members enjoy a 5-year term, after which the House is dissolved, which means that all members go up for election at the same time. The Rajya Sabha is a permanent house that is not dissolved at any point. Members serve a 6-year term. A third of the House is elected by rotation every 2 years. The number of members a state sends to the Rajya Sabha is on the basis of the population of each state. Uttar Pradesh has 30 Rajya Sabha members, Maharashtra 19, Bihar 16, and so on. Now, given the rolling nature of Rajya Sabha elections, a party that has had a sustained run of victories across India's states still has to wait for a considerable period of time to significantly improve its strength in the Rajya Sabha. While the Bharatiya Janata Party have returned to power with its highest tally ever in states like Uttar Pradesh or Maharashtra and has won a number of smaller states for the first time, it gets to exercise their strength only over a 6-year cycle. Why is the March-April 2018 Rajya Sabha election important? For much of the Modi government's tenure so far, the BJP's strength has been lower than that of the Congress in the Rajya Sabha. It is only recently that the BJP has become the largest party in the upper house, and the 2018 round of elections presents an opportunity to increase that lead. The BJP currently holds 18 seats that will go up for election, and Bloomberg Quint columnist Richard Rosov estimates that the BJP will enjoy a net gain of 9 seats in this round, taking its tally to 67 or 27% of the Rajya Sabha strength, still way below the halfway mark.
Well, there's lots to talk about with the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Billionaire owner of the Aditya Birla Group, Kumar Mangalam Birla, will head the merged entity of Idea Cellular and Vodafone India that is set to become India's largest telecom company. And the Interpol has sought additional information from the Enforcement Directorate about diamond traders Nirav Modi and Mehul Choksi in connection with the over 12,000 crore rupees PNB scam as a part of the process to issue a red corner notice against them. And with that, it's a wrap on this edition of All You Need to Know. Up next is Indian Open. Stay tuned in.
Are we live?